Hello Market Club members and fellow traders everywhere. Adam Hewison here, president of INO.com and co-founder of Market Club with your market update for Monday, the 7th of April. Well, it's been quite a week last week, and certainly this week has started off on a very negative note for stocks. We were looking at tech and internet stocks today. We had a bunch to go through. But first of all, what I want to show you is how to look at trade triangles on your portfolio. It's really quite simple, and you can use this quite easily. So I've sorted these out into categories. So this last column here, this one right here, if this is a green, like it is right here, that means the major trend is positive still. If you have, like we have here, we have a red triangles, we have trade triangles, that's negative trend. So they're the really two areas you want to look at. If it's green in the far right column, it's a positive trend longer term. If it's red, it means the trend, you should either be out of the market or short the market. Now the second column right here indicates the weekly trends. As you can see, if it has a yellow right here, it means that that occurred today. That change in trend occurred in the weekly charts today, indicating that the trend intermediate term is still down, even though the longer term trend is still positive. Now when you get the weeklies down along with the monthlies, that's a very strong downtrend. You don't want to pay so much attention to this final column here. These are the dailies. These are just the whipsaws, little choppy markets. Don't worry too much about them. What it can tell you is if it has a yellow box around it, means that happened today. But generally for stocks, you want to just concentrate on these two boxes, the monthly and the weekly. So let's go take a look at these stocks and see what's going on. Starting with Intel, as you can see, we have all of our trade triangles are still positive, indicating the trend is positive. You can see we've moved to new high ground today, at least a new high, looks like a new high close potentially set up for quite some time. The highest close obviously was back here, and that was at 26.67, and that was back some time ago, back in, looks like January of 2014. So we're 26.63, so we're just a few points away from there about making a new high close for the move, which is very impressive given the scenario with the rest of the market right now, which is very much on the downside. Now Cisco, these are well-financed companies. Just remember that these aren't little pie in the sky, wishy-washy companies. These are very well financed companies. Cisco, much the same there, a very strong upward day. It has elected to hit a potential roadblock, and that's the parabolic there, indicating we could see some more, potentially some more pressure on the downside. But nonetheless, looks like 85 still a positive trend for Cisco. Watch the weeklies on that. Now with Qualcomm, big negative engulfing line last Friday. We are a little bit unchanged for the day. Potentially we may see some more sideways to lower action, but nonetheless the weeklies are both in conjunction with the monthlies, which means it's a strong trend. New trend, new highs, you can see last week's. But I think this weekly engulfing line is going to mean a lot of negatives for the market for the moment. Now on Apple, we had a signal today, right here today, at 525.20. If you remember, we had a signal here at 539 indicating that the trend has gone up. You should be out of this market now. Something is going on here. We don't know what it is, but nonetheless, the trade triangles are telling you you should be out of this market right now. You've got a mixture between the monthly, which is longer term positive, while the weekly is negative. So you should be out of Apple right now. Facebook is the same thing there. You should be out of Facebook based on our weekly trade triangle. You can see that kicked in right here at 66.51. Markets is 55.90, so it's quite about $11 ago. You would have gotten out of this market thanks to our trade triangle. That's the way you would have gotten in here at 63.37. And so you would have made some money there, 66, about $3, about 5%, but you would have made it in a relatively short period of time, which is good. But nonetheless, right now you should be out of Facebook. This is Netflix. As you can see there, we have a red weekly and a green monthly, indicating the trend is mixed, indicating that you should be out of the market right now if you're a short-term, intermediate-term trader. Now what's interesting with Netflix is this, is look at the lows right here and look at where we are. Around the 320 level, that seems to be a low-risk entry point for this market for the time being. So I would definitely take a close look at some sort of reversal coming from these levels if we see it. So let's see how things play out on that one. But again, you've got the monthly, the longer term monthly is positive, and then you have the green monthly and the red weekly, meaning you should be on the sidelines in this stock right now. Moving on to Tesla. Tesla's got much the same picture here, a green and a red, indicating you should be out of Tesla right now. And even though we love electric cars, love Netflix, the reality is this is the market, and the perception is the market wants to go lower right now in the short term. Yelp is another one. We had a signal on Friday at 66.47 to be negative. With Amazon, we love Amazon. We order all the time from them. In fact, we just ordered the Flash Boys books for the winners of our competition. If you haven't entered, it's still not too late, but here we have a weekly which is right here at 354. Market's trading at 315, so you can see how much that has caused. And you can see the monthly was all the way back here at 341. So again, these monthlies can occur, but it may take a while for the market to actually catch up with it. This is not a particularly good sign for Amazon, even though it is the leader in e-commerce. And that just shows you perception is everything. You've gone from over a high, we've traded this market as high as 408, and we're almost $100 lower in the stock. Here's another stock, Groupon, which is still a negative in our opinion. All systems are negative, 840 on the monthly, and the weekly is the monthly right there, you can see, and it's still making new lows today. Twitter, we had a monthly signal Friday, I should say, at 43.31. All signs point to a lower price for this stock, so we'll see how that plays out. Last one we're looking at is Yelp, internet stock, and you can see that Yelp is still under pressure as well. Okay, so there you have it. You have all of the ones that have green, longer term positive, red, negative. If it's in the middle, you should be on the sidelines in these stocks. The only stocks you should possibly be long this market right now are Intel, Cisco, and Qualcomm. That's it. And they could change quite rapidly. So watch the intermediate term trend for timing, and the third column here, that's for trend. That tells you the trend. If it's red, it's down. If it's green, it's up. Pretty simple stuff. It's the best way to trade. I'm Adam Houston from Market Club. Thanks for stopping by. If you have any questions about this, ask about any market and get an answer. Only for members and only from marketclub.com. Have a great trading day, everyone.